So the first pattern that we're going to talk about is a bear flag. So the bear flag is a bearish pattern. It's a bearish continuation pattern. And this usually, if you want to take bear flags, you want to do this on days where we have a red, or I guess like a strong downtrend, because you want to play the trend more likely than not if you try to fade or play against the trend, meaning if we are on a downtrend day, you try to get calls and try to find these little pullbacks. More times than not, that's not going to work for you long term. So the way you can play the trend on these days, you can see we have a very strong downtrend. We got this sell signal, close below the 200 EMA and just continue to dump, is you play a bear flag. So the bear flag begins with a strong move down, which we can call the flagpole. So we're going to begin here. You'll see we'll get a strong move down, and then we end up finding support somewhere. And when we end up finding support, we start to consolidate. So this is the part where you can see the flag formation. So I'm going to let it consolidate for a little bit. Okay, there. So let's go ahead and draw this to make it easier. So you can see we have this extended move down, and then we find some consolidation. So we get some consolidation here, and we can kind of draw like this flag pattern. Alright, so when you have something like this, strong move down, small push back up to form this flag pattern, there's two ways to play this. You can play it on the safe side where you wait for that flag to break and then enter to continue that momentum, or if you're a little bit more confident, you can enter when you can see this consolidation approach a resistance. So here we have the 9 EMA. We can see that the 9 EMA has been a really strong kind of point of resistance, and the trend has been riding the 9 EMA and the 5 EMA this whole day. So we could enter here, and then if we see the 9 EMA will get us to, we'll reject off the 9 EMA, which will give us a lot of downward momentum. And then you could enter 0 DTE puts, and my next target obviously would be the next line I have, which is the fib support right here. Okay, so you enter on that flag. Alright, we run into the 9 EMA, which pushes us down. And we dump to the next support level. And so that's how you can play a bear flag on SPY. And this is the 5-minute chart. So the next pattern that we're going to talk about is a bull flag. So the bull flag is a bullish or upward momentum continuation pattern. So just like the bear flag, except now we're looking at the inverse. So we're looking at an uptrend, and the day that I'm going to use for reference is Friday the 13th, January 13th, 2023. So just like the bear flag, we like to play those on trend days to the downside. Bull flags are best played on trend days to the upside, which you can see here. This day was a very strong uptrend. So let's go ahead and start the price action from here. So what I look for is I look for a breakout, and that breakout is going to consist of several bullish candles, and that's going to create the flagpole. So here we have a pretty strong uptrend, and then we consolidate, and you'll see that when we break out to the upside here, so we close above high of day, and then we have my fib level resistance here. So then we close above that, and then we break out, and we make this big upside move here. And so this upside move we can consider the flagpole. So I'm going to draw this little line here to represent the flagpole, and then this is always followed by in a bull flag pattern some consolidation. So we're going to start to consolidate, we're going to pull back, we're going to find some support here on the 5 EMA, and then we find support on the 9 EMA. And this is where you can kind of see that we're forming this pattern, this flag pattern. So this is going to be the actual flag, and so what we can do is, to help illustrate this better, I'm going to go ahead and draw this channel here. And so this is what we consider the actual flag. So what we're looking at here, where you can enter a trade, is if you see a break of this flag pattern. So ideally we want a candle close above this formation. And then we can see here that we have really strong support along the 9 and the 21 EMA. So if you look here on the 21 EMA, we bounced very strongly off of here to continue this move, and then over here we also found support, as well as over here. So 3 spots here where we found support. So I'd look to enter a call here, and then my next target would be the next overhead resistance I have, which is the bottom of this zone, and my stop loss would be a close below this super strong support of the 21 EMA. And so as you can see, so here's where we break the formation. We get a candle close above here, and then we consolidate, pull back to the 21, and then ultimately end up going continuing to the upside. So that's how you play a bull flag. So the next pattern that we're going to talk about is the head and shoulders pattern. This is a bearish reversal pattern, and this typically occurs when we have a strong uptrend and then we start to reverse, forming this head and shoulders. So as the name implies, there are three components of this pattern plus the neckline. So the components are this left shoulder, which you'll see here. We have the head, or the kind of the bigger high, the top of this pattern, and then you have the right shoulder. And then the characteristic neckline right here, which happens to fall on a fib level, is that key level of support that we look for to actually end up breaking, so this pattern is confirmed and we can take a move to the downside. So let me go ahead and play this pattern out just to make it a little bit easier to see in real time. So you'll see here, get a buy signal, we'll find some support there. So we'll break out, close above this fib level, and then we'll make our move back to find that support. So some resistance here at this fib level. So this zone right here is yesterday, well, the prior day's high of day supply zone. So this is a pretty strong support of resistance, and that's actually where we end up rejecting multiple times and then forming this head. And then again we fall back to that support. I jumped the gun a little bit right there. So you'll see here, this is what forms the neckline, and then we're going to form the right shoulder. Yeah, so once you see this pattern forming, you're going to look for some confirmation. So ideally, what I would look for, I would probably enter puts, not just when this pattern confirms, but I want to see a candle close below VWAP, because VWAP can be an incredibly strong level of support. So even with this pattern and other forms of confirmation, like this crossover, red MACD, a lot of other things, we want to make sure that we don't get we don't come back to VWAP and then have a very strong reversal of the upside. So candle close below VWAP would, for me, confirm that pattern and allow me a put entry. Alright, so we drop below there, we close below VWAP. Here's where I would enter puts. And then what you want to do, so we have a lot of kind of free zone to fall there, I want to make sure I have a place where I can take profit. So we can look back here, we can find any strong level of support or resistance. So you can see here, this was a pretty strong level. You can see that that was the start of this candle, and then we also failed to break here multiple times. We also can see that we wicked off this area and then found support here, so that's a really strong level. So I'd enter puts and then look to take my profit there. My stop loss would be a candle close above VWAP, and so yeah, let's see how this plays out. Yep, essentially it gets very close to that level. But yeah, so that's where I would play that head and shoulders, and hopefully that's been helpful. So the next pattern that we're going to talk about is the inverse head and shoulders. So this is a bullish reversal pattern, just like the head and shoulders. It'll have the same components, just on the bearish side. We still have both shoulders, we have the neckline, and we have the head. So it's not as pronounced, this example, as the head and shoulders, but we can still kind of understand what's happening here. So we'll draw an arrow here. So this would qualify as, we'll flip it upside down, we'll call this the left shoulder, and then I would call this the right shoulder, and then I would call that the head. And I would draw the neckline at a clear support, which is right there. And so you can see that that's where this head bounced. This is also where, that's where the shoulder bounced. This is also where the head bounced. And then this is a very clear level of resistance when this reverses. And so I'm going to let this play out, and then I will let you guys know where I would take the trade, and then my rationale and everything else. So once we see this huge move to the downside, and this was a very, very strong move to the downside, even in pre-market we start to dump, and then we start to see some bullish reversal pattern, right? We see this inverse head and shoulders. We also see some other things that are a good indication of a reversal. So we're seeing the 9 and 21 start to curl. We're starting to see some increasing buy volume here. We're starting to see a green MACD and a formation of this pattern. So what I would do is once I see that this pattern is forming, obviously we draw the neckline, and we're looking for that neckline to break, but at the same time I want some other confirmation as well. So what I'm looking for is a candle close above that neckline, which we can see is already happening here. I also want that 9 in EMA to cross, and then I would probably enter a trade here, and what I would look for, you can probably see from this move right here, we might encounter some resistance there and potentially there, but in all reality, with the strength of this move, I could definitely see us hitting this fib level, and so ideally that's where I would take all my profits. And I would probably stop out on a close below the 21 EMA. So we're going to end up getting that candle close. We get that crossover. We end up just completely shooting up to the upside. So you could have entered on that candle there, and you'll also see that we have a significant increase in volume. I want to see if this actually breaks through that resistance. Alright, so it rejects off of the fib level resistance, and then find some support on the 21 EMA in this level right here. So that's how you can play a inverse head and shoulders. As you can see, after this played out and then we got all our bullish reversal indicators, we continued this move to the upside. So the next pattern that we're going to be talking about is the double top pattern. So the double top is a bearish reversal pattern, and it consists of, as you would guess, two tops, and this typically happens when we encounter very strong resistance. And we're on uptrend, we encounter very strong resistance, and then we reverse to the downside. So this is Tuesday, November 8th, 2022 on the SPY chart, and this is the 5-minute chart, and I'm, just like the previous examples, I'm going to be showing you how I would play them, the setup, where I would enter, my stop loss, and then of course my profit target. So let's begin. So the first thing that you want to do is let's go ahead and go back to where we would start to identify this pattern. So first thing happens is we reject very strong off of this fib level, and then we fall back to support. We hit the 21 EMA, and then we bounce back, and then we try to break through this level again and then fail. And so now what you would do after you see that we failed to break out, you would look for a level of support to see where you can play this double top. So as you can see here, this is a very good level right here to draw your support, and so I'll show you why. So if you look here, I'll make this a little bit larger, you can see that that was a resistance for these two candles. Again, we wicked through this, we could not break it, and then also these two candles could not break through that support, and then all three of these candles wicked through that support and it held, and this candle as well touched that support and held. And so after I noticed this double top, and it should be obvious, but you can see here are the two tops, I would look to enter puts. However, I would wait for a couple of things here. So number one, I would need a clear close below this support level. This support level is the key level that we're looking at this double top pattern. I would also I would look for some volume confirmation. We also have this red MACD. Now you can also wait if you want further confirmation for the 9 to cross the 21 EMA, but honestly this pattern, this setup is really good. If we get a strong close below the 21, I would actually consider entering puts there. And the first level of support that I would expect would probably be this level, and then we have this fib support as well as VWAP. So if I entered here, my stop loss would be a close back above the 21 EMA. I'll see if there's also another entry after the crossover, which would be safer, and then this would be my target right here, first target, second target, third target, and I think honestly if we close below VWAP we probably could go back all the way to pre-market highs. So we see that candle closes here, and that is a huge dump to VWAP. We find support on VWAP, and then we continue dumping. And so this is the safe entry, in my opinion. So right here, so once we closed below pre-market low, we closed below VWAP, got my sell signal, huge volume here, and we have the 920 EMA crossover. I would enter here looking to scalp all the way down to the 200 EMA. And let's see what happens here. Yep, so we bounce off the 200 EMA and we have some strong support there. So that's the really safe entry, which I would have taken. It's also possible, honestly, seeing this huge invalidation of this pattern, closing below the 9 to 21 EMA on this bearish engulfing candle. That also could have been a good entry. So both of those worked. This was the safest one, and that is how you play a double top. So the next pattern that we're going to talk about is the double bottom pattern. So this double bottom pattern is a bullish reversal pattern, and so it kind of consists of two bottoms. So we're testing a support level twice, failing to break through that support, and then reversing to the upside. So again, we're going to be looking at the SPY 5-minute chart. So I'm going to identify right here this double bottom, and so as we said, characteristically a double bottom is defined by those two bottoms right there. And what we look for is we look for a resistance level that both of these end up touching, and then once we can break through that resistance level, that is when we would want to take our calls. So you see we're going to pull back, hit the support level, bounce back, and then we find strong resistance at this fib level, and we also try to wick through the 21 EMA. We can't break through, and then again we push down, bounce off of this level, pull back to that same resistance level, and that is where we'd want to eye calls. And so I'm going to go ahead and, as we did with the other patterns, we're going to go to where we start the pattern actually start to take form, and then we can do some analysis there. Okay, I'm going to go ahead and I guess we can do like a little zone for this, right? Okay, we'll do it as a zone because we didn't necessarily touch the exact bottom twice, but very close, very good, the same idea. So here, like we said before, we start to notice the double bottom pattern. Now I would start to enter calls on a few different things. Like as we said before, we want candle closes as confirmation. So I would want to see a candle close above this fib level, because this fib level is that really strong resistance that we want to see break through. I would also want, ideally, this green MACD, which we have. I want some green volume on this move. An uptick in volume would be nice. I also want that bullish 9 and 21 EMA crossover as an additional form of conviction, and then I would enter calls. Now, as we can see here, we have a few different levels where we can take these calls. So the first level is this, once we break through here, I have another fib level right here, and then we have VWAP up above. Some other potential areas where we might encounter resistance, you can see this could be a level we encounter some resistance, and then potentially here as well. So we're going to go ahead and see how this plays out. So we get that close above this fib level. We reject that another fib level. Okay, reject again, and now we're starting to see that crossover happen. Alright, so now we finally have that crossover. We're still above the breakout, so now that we're above this support, we actually, the pattern is still confirmed. It would be a pretty big problem if we closed below that support and we kind of broke through all the way and retested this level. We could continue down, or we could even get a triple bottom, which I've seen before. But anyway, right here I have the 921 EMA crossover. We are seeing an increasing volume profile, which you can see here on this move. We have the green MACD, and so what I want to see is I want to see this candle close above these levels. I would enter a call here. I would take my profits if we retest this resistance level, and then my second target is here, and then ultimately this third zone right here, this third level right here. And my stop loss here would be a close below the 21 EMA. So enter calls there. We shoot up. Okay, so we hit both my targets. VWAP is always my last target on these moves if we're below VWAP, because VWAP, so as you can see, VWAP typically will end up with a strong rejection. It doesn't always break through like this. Oftentimes we have a rejection close below and we can continue that downside. So I would have taken all my profits here, but I'll go ahead and let this play out anyway. Yep. So VWAP was very strong support there, as you can see. So yeah, so that's a double bottom pattern, and that's played out. It continued to the upside for the rest of the day, and that's how I would take it. So the final pattern that we're going to be talking about is the cup and handle pattern. So the cup and handle pattern is a bullish pattern that we look for continued upside. Now this is definitely one of the rarer patterns. I mean, I had to scroll pretty far back to find this. This is a SPY 5-minute chart. There's a few examples, but this was the cleanest example I could find, and this was from last August. So yeah, they're pretty rare, but they can be pretty fun to play. Sometimes they can result in huge breakouts. This one was a much smaller one, but I'll explain kind of the components of this pattern and how to play it. So obviously, as the name implies, we have a cup and we have a handle. So I don't know how I'd draw this very well, so I'm not even going to bother trying to draw this with arrows. But you can see here, this is the cup. You can have this huge dip and then reversal and then another pullback, and then you have a smaller kind of dip that forms a handle. So this is the cup, this is the handle. And the way you can play these is you want to draw a resistance level that stems from the initial move, from that cup. And so let me go through the replay mode and let me draw this back so I can show you how to play this. Okay. So here we are. You can see we open, have this buy signal, we continue all the way up. We find resistance here, which comes from probably this previous candle. It could be a level further back, and then we reject and we fall all the way down to this fib level support right here. Then we reverse, go all the way back to that same support level or resistance level, reject again, and then find support a lot higher than the previous level here, which is on the 21 EMA. Now we're going to start to watch. We see the cup and we see this little pullback. Here's where I'd be thinking, hey, this could form a cup and handle pattern if we don't close below VWAP in the 21 EMA and dump back to this level. So we see us start to go back. Alright, now it went a little bit ahead of me here, but we see we retest this level, and this is where we have the full cup and handle. Now the way I would play this is I would want a close. We already have the 921 EMA crossover, so we already have that going for us, and on the momentum side we're above the VWAP, which is also good. We also have a green MACD, and you can see an increase in volume here from that last candle on, so that's also a good sign on the breakout. So now that we've broken out, we've closed above this resistance level. Now let's start looking at calls. So there's not much room here on this move. I see a very strong overhead resistance at the 200 EMA. If you're quick, you could probably scalp this for 10%, but honestly, this is not the biggest breakout. And I also see another potential point of resistance, which is this supply zone from yesterday's or the previous day's low of day. So you could probably scalp a little off that one. We end up going up and just hitting that resistance right there, and then we reject the supply zone. And then I think we consolidate under that 200 EMA. So yeah, very small breakout, but it's still a cup and handle pattern. It still was validated, and we still got to move up. So I just wanted to show that pattern right there, and that's how I would have played that. Very small scalp, not really worth it in my opinion. If you have a bullish pattern, you have things going for you, and you have these overhead resistances, it's just not worth getting into a trade most of the time. So yeah, there it is.